In this episode, we speak with Todd Abbrecht, co-CEO of THL Partners, a premier private equity firm investing in middle-market growth companies exclusively within three sectors: healthcare, financial technology and services, and technology and business solutions. Since 1974, THL's team has managed or deployed $50 billion of equity capital, worked with over 175 partner companies worldwide, and fueled more than 700 add-on acquisitions, representing an aggregate enterprise value of over $260 billion. Todd has spent more than 30 years at THL and has played a central role in the firm's evolution towards sector specialization. The firm combines deep sector expertise through its Identified Sector Opportunity, or ISO, process, with dedicated internal operating resources from its Strategic Resource Group to transform and build great companies of lasting value in partnership with management teams. These resources aim to accelerate growth, improve operations, and drive long-term sustainable value. THL Partners was recognized as a top private equity firm of 2025 by GrowthCap. I am your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Todd, thank you so much for taking the time. It's great to be with you.
Likewise, RJ. Thanks for having me.
Always a pleasure to have THL on. I think we've had one, maybe two of your other colleagues on in the past. But for the benefit of our audience, to refresh everyone about THL, we'd like to start off with the overview. A little bit of history, too, is helpful because THL is a well-known, highly reputable name in the private equity industry. So let's kick off there, if that works.
That sounds great. Thank you. First, a little bit about myself. I've been at THL for 35 years. I worked my way through the investing side of our business within our healthcare and consumer franchises. I helped to run those businesses for about a decade and then became the head of private equity in the mid-2010s, and in 2020 became co-CEO of the firm. So I like to say all that experience makes me good at two things, which is comparing and contrasting prior versions of the industry and of THL, but otherwise this industry is too dynamic to get much more than that. In terms of the firm, a few facts. THL Partners is one of the pioneers within private equity. The firm was founded over 50 years ago and known for some of the industry's more iconic transactions like Snapple Beverage and Dunkin' Donuts and Thermo Fisher Scientific. Today, we have over 135 professionals. We are focused on private equity, which we think is important. My partner, Scott Sperling, and I are both focused on helping our private equity business make the best possible returns for our investors, as opposed to driving other platforms or investing in other asset classes. We invest out of three industry verticals: financial services, technology, and healthcare. But that's almost a quaint thought at this point. We were one of the first firms to move from a generalist exposure to a verticalized investing focus over 20 years ago. But today, the action is in the subsectors below. And we've identified 16 spaces. We call them ISOs. We are not great at creating interesting acronyms, but we know what they mean, which stands for Identified Sector Opportunities. And I'll come back to those in a minute. But those are just some stats about the firm. We do feel fortunate to have created a good, powerful product for a period of time that's resonated with investors. And when I look back at what we offer today and think about why it could persist or why we've had success, I really land on three pillars that we keep and continue to invest in. The first is our commitment to subsector focus. So we have these 16 identified sector opportunities. We've selected sectors that we think have the best durable trends, and we're entirely committed to them. We're not opportunistic. As we like to say, we don't want to be a tourist in any one of our verticals. And it helps to invest in spaces that have more attractive opportunities. But in addition, we aspire to be the best practitioner within each one of those spaces. So all of our people are organized by ISO in order to really flush out that aspiration. And today you can see it in the ways we express our expertise in podcasts and white papers and LinkedIn panels, all of which we think are important to really make it clear that we care and are important in these 16 ISOs. The second pillar we're committed to is an internal operations program that we call the Strategic Resource Group. Now, I joke that this is one of the most abused concepts in private equity. Everybody has some flavor of how they do this. We've got lots of data around our effectiveness, but I think it's better to point to a couple things that are truly differentiated. We have about 20 people in this group. They're all former operators or consultants. But more importantly, we've had this effort for over 20 years. We were one of the first firms to build an internal operations team. And all that experience has allowed us to make a lot of mistakes, some of which we see other firms making today, and also optimize the platform. Secondly, our people are all specialized within that group. This is not a group of retired CEOs who are having a cup of coffee with our portfolio company CEOs. These are experts by function or by sector, sometimes both, where we think we can really add value to these businesses. And then lastly, they're aligned with the rest of the platform, which sounds like kind of a squishy, soft word, but what it really means is they're employed. Our management company pays the compensation and shares carry with all of our SRG team members. We think that drives alignment around multiple of money creation and eliminates some of the problems like second-class citizens that can exist when you have different titling structures and different economics for the internal operations team. And then the third pillar that we've really committed ourselves to is integration. And I think when you take the first two, our ISO conviction and our SRG team, and then you force an integrated model where our executives work from sourcing to exit in pods, SRG team members, investment team members, business development team members all together, you can drive more conviction and faster timelines. That allows us to unlevel the playing field and create advantaged and exclusive sourcing opportunities. It also allows us to install value creation and exit faster. And it shows up in investment statistics in terms of its power. So those are really the three pillars that underpin our version of private equity in the middle market in North America.
I think it's fascinating that you've really seen the evolution of private equity in the middle market over the last 3 decades, and then you formulated this strategy that you just outlined to us. First, I have a couple questions from what you just went through, but maybe to help the audience see the power of the THL model, we could do an example, if you could share with us where you partnered up with a company.
Yeah, I think that makes a lot of sense. Think about how we invest and what we're looking for in a company. It starts with strong, durable markets that have secular tailwinds. That really encompasses much of the ISO strategy. We then look for businesses that have a great product or service with a strong voice of the customer that has attractive return on invested capital characteristics. And then lastly, we work during sourcing and diligence to identify opportunities where we can inflect growth organically and or inorganically. That's often done through our strategic resource group. Mm-hmm. A very good example of that in motion would be our investment in a company called CSafe. CSafe makes products, specifically containers that are like giant refrigerators that often go on airplanes to transport life-saving medications around the world from where they're made to where they're going to be administered to patients. And many drugs and an increasing number of drugs need to be kept in what's called the cold chain. So it's a very important and vital part of the pharmaceutical industry. CSafe exhibits all of the characteristics that I talked about. Customers loved the product, loved the service, and were voting with their enthusiasm as we did our diligence that this was a company that they wanted to do more business with. Despite all of that enthusiasm, CSafe only had 3 of the top 20 pharmaceutical companies as customers when we made our investment. And pharmaceutical companies are demanding as customers. They've got a lot of regulatory issues, qualification issues. So it's a tough nut to crack. And this is where the sector experience in the SRG team became critical. We've been investors in the pharmaceutical service industry for over 30 years. We know all of the players. We know their problems, the issues they face trying to validate a service provider. And we were able to work with the management team and the CEO, who was CFO at the time, to build a better go-to-market strategy. And some of the components of that were stuff that is more simple but not well known to smaller companies. Building a very high-quality CRM tool, building a high-quality sales ops function. Those are things that we've done repeatedly in the space and we knew we could install here. Perhaps most importantly, we also installed one of our SRG team members as an interim chief commercial officer at the company. And she executed a playbook to build out a team that could then take this great product and sell it more clearly and more effectively in the market. In pretty short order, we had 19 of the top 20 pharmaceutical companies in the world, and today we have all 20. And that story reflects a lot of common themes around what we do. Again, the sector expertise, as well as using the strategic resource group. But we've also found within that SRG team and within that motion, it's very valuable to be able to drop executives into companies on an interim basis. And in fact, half of our SRG team members have actually served interim roles in our portfolio companies. It's almost a joke, it's almost a porous border between the SRG team and the portfolio companies. And all of those things together had a huge impact on the company.
Mm-hmm. Now, going into the 16 subsectors, it's quite a few focus areas. And I'm wondering how you think about that with the cadence of investing or deploying capital. I mean, there could be long stretches, I imagine, where certain subsectors, you're not really investing in those. Or do you say, yeah, we want to consistently deploy across those 16?
It's a great question. So what we call the ISO process, which is the curation of the ISOs, is meant to be durable, but also dynamic, meaning you can change it. And one of the best ways to encourage that behavior is you can't do a deal outside of an ISO. So on any given Monday at an investment committee, one of our vertical leads may be putting on the agenda, I want to talk about either reshaping an ISO, eliminating an ISO, or bringing a new ISO in. So there's a bottoms up feature to it. There's also a top-down feature that has a few purposes. We do a full review with the entire firm of each ISO. We have a proprietary scoring process. By the way, they all score high, which is the intent. But we talk about what makes certain sectors attractive and interesting, which is very valuable in a multi-specialist firm like ourselves as a teaching moment for all of the other professionals to understand, wow, what is it about pharma services that has made it a good place to invest, or certain areas of technology? And that top-down component of it also helps to shape those ISOs. The reality is, as a firm, we're making 3 to 5 investments per year, about 15 investments over a 4-year investing cycle for a fund. So by definition, some of those ISOs are going to be more active or less active than others. We often get the question, what is the percentage you've identified you want for each ISO in terms of representation fund? And we very deliberately don't answer that because we want people to bring to the investment committee the best opportunities they're seeing. The investment committee then will adjudicate where dollars should go. At the end of the day, the process is pretty efficient and effective in terms of the vertical heads making adjustments in their ISOs, because we end up at about a third in those industries in terms of dollar and number of company exposure. But the ISOs may be different at the end of the fund, slightly different than they are at the beginning.
Mm-hmm. The topic du jour is artificial intelligence. There's different ways people work with artificial intelligence and leverage it into their portfolio companies, or they're investing more directly into AI-driven business models. Where does that fit into your focus areas?
Yeah, it is the topic du jour. I think it's all three of those things that you mentioned. We're trying to find AI opportunities within the portfolio to create efficiencies or revenue opportunities. We are also within our own platform making AI investments such that THL can be a better investor using AI tools. And I think you have to, in this particular environment, go at both of those things at the same time. Within the firm, we started with a more grassroots up approach where we provided the tools. We had each vertical lead experiment. We ran contests to see who could use the most tokens in terms of AI, very grassroots to encourage behavior change. We, in the last 6 months, have really migrated to a tops-down approach, and we have built tools internally that can be used by the investment committee such that we can access all of the diligence and all of the historical information we've ever collected on a given sector. which is really interesting. We have thousands of expert interviews that were sitting in Microsoft Word files. They've now been ingested and they are available at a moment's notice. That is proprietary data that we will use and is really important. Within the portfolio, we've really approached this through the strategic resource group. And we've created a data and analytics capability with 4 people in that effort now. It will grow. And we're really coming to some conclusions that the AI tools themselves are useful, but what's super critical is organizing and accessing the data that you have on your platform. So creating data sets that AI can manipulate is probably the gold standard for what most people should be shooting at now. And when I think about private equity investing, there's no doubt in my mind that the tools available will democratize the process by which decisions are made in investment firms. It's going to become easier. It is going to become simpler and more accessible for many people to make decisions about which companies to invest in. However, it's entirely dependent on the quality of the data you're using to put in those models. And this is what brings me back to our sector focus. Knowing the right experts to talk to, knowing which third parties to believe have really good data, building your own proprietary data sets is going to be ingested by the models. It will be processed more efficiently, but if it's garbage in, it's going to be garbage out. So I think the importance of the sector focus is absolutely as critical as it has been in the pre-AI periods.
I'd like to shift gears a little bit into THL itself and the firm. I'm always fascinated by private equity firm building and the maintenance and cultivation of the culture. All that has to be intentionally done. How have you gone about kind of developing a certain culture at the firm?
It is really important. Culture can help you avoid what I think is one of the most dangerous problems within these partnerships as they become successful, which is complacency. I'm working 100%. What if I work 95%? And if the entire firm is doing that, it can cause problems. So you want to build a culture that really supports best-in-class effort. And what we've landed on is really 3 words that define us. It's very authentic to us. Those 3 words are smart, hungry, and humble. I think you can find smart and hungry a lot in private equity. Humble may be a little more challenging. But if you look around the most senior people at this firm, all the way through our younger investor ranks, our people come from modest beginnings, many from the Midwest, including myself. I'm from Michigan, had difficult summer jobs, know how to deal with lots of different types of people and understand lots of different types of people. And I think people that have had those experiences are attracted to our platform, and that platform is attracted to those types of people. And it creates a bond amongst us that becomes the underpinning of how we invest. An arrogant investor is likely to fail. A humble investor is likely to learn and to continue to grow. So I think this notion of humility has helped us be better investors. It also drives a level of empathy. Running a private equity-backed portfolio company is really hard work with very demanding people asking really tough questions. And we approach that with humility and empathy. We ask lots of questions. We want to understand. We want to partner and build that alignment. And those aren't just words. It's very authentic to us. And it's why I think people have stayed at this firm for so long and really want it to be successful. And I hope keep that 100% effort level constantly percolating.
Mm-hmm. The private equity industry is one that's very competitive, and there's always very smart people starting new firms, growing their existing ones. What's the biggest challenge in running a private equity firm?
I think it's talent. It's making sure that you are accessing the best talent, you are retaining the best talent. We have an expression that we like to use at our management committee, which is that we want THL to be a destination for great talent. And part of that is investing in capabilities. We have a chief performance officer, chief talent officer here at THL who works with our people to help them develop. And that took some time for people to embrace. You know, the year-end review process, which is well understood, is I'll see you next year afterward. And breaking that and encouraging people to share their challenges and their issues with someone who can help them address them or be better took a little bit of time. But I think we've achieved that. So our chief performance officer, she doesn't go more than 6 weeks without talking to every single person at the firm. And we have constant review, constant feedback. It might be after a meeting or after a deal. And the hallmark of success in regard to that, in my opinion, is our executives now seek out the feedback. I just had this investment committee process. I had this meeting. How did I do? What could I do to be better? That is nirvana. Because if you can get everybody asking that question and being intellectually curious about their own development, the rest of the pieces generally can fall in place.
Mm-hmm. I typically start asking about your personal background. You did mention you grew up in Michigan. You mentioned wanting to know about folks, their summer jobs. Did you have a tough summer job growing up?
Oh, I think I hit them all. As they say, I don't know you could swing a dead cat without meeting a bad summer job. Mowing lawns, bussing tables. I never graduated to being a waiter, working in warehouses in, heat. And they're formative experiences. It's the first time you've had a chance to be outside of your home and doing real work. And meeting and understanding what motivates different people in different spaces becomes valuable later as you become an investor. But yeah, I had plenty of those.
It's not often that I interview someone who's had as long a career as you've had with just 2 firms. I believe it was Credit Suisse and then
Yes.
It was THL. Maybe if you could just tell us the difference between THL then, 33 years ago, and today.
Yeah, that's great. So when I joined THL, there was no private equity industry. I was joining what was called an LBO shop. And I had a little bit of expertise as an analyst at Credit Suisse First Boston, because I'd worked in the depository institutions group doing bank M&A. And banks in the early 90s were failing left and right. And these LBO shops that had popped up thought, hey, maybe we can invest in these businesses, but we don't understand their financial statements. So I got some experience getting to know a few of them. But the nature of the beast back then was, how do you secure an investment as an LBO shop? You were viewed as a buyer of last resort. No self-respecting strategic would sell you a company, because that would mean maybe the rest of their assets aren't attractive to other strategics in the space. And the know-how of an LBO was critically important. We wouldn't share our financial models in paper or in soft copy, because those were proprietary technology. And I joke that I think any one of my 3 children could find an LBO model online now and run it within a couple of hours, right? So a lot of the specialness in the technology has been commoditized. And what's really critical now is, how do you apply specialized resources to source, identify, and then add value and create inflection points to the companies in which you invest. So that's really what encouraged us to just drive towards specialization as aggressively as we can, because it's where the value is now, not in any of the technology for the investment component of the asset class. That needs to be done well, but again, I think it's more readily available.
We're heading into the tail end of the conversation. I have 2 final questions. One is, can you tell us about a person who has had a profound influence on you?
Oh my gosh, yes. I would probably pick my grandfather. On my mother's side, I didn't know my paternal grandfather, but he was born and raised in Ohio, lived in Michigan, moved away from a broken home when he was 16, and became a self-made man selling paint to automotive companies. And really appreciating hard work, honesty, integrity, and all that it means, and how it can drive professional success, but also how it can drive happiness and personal success. And keeping those mantras in place resonated with me, from an early age.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Yes, I'm a type 1 diabetic, which I've been for 25 years. It's just part of my life. And finding a cure or a cause for that disease would be wonderful in my lifetime. I think it's possible. So I serve humbly as a trustee on a couple of charities that are organized and focused on that mission.
Todd, I want to thank you again for taking the time. It's been a great conversation.
Likewise. Thanks, RJ. I really appreciate it.